I'm hoping maybe you can bring that tweet to our audience this morning.
Thank you, Andrew. I mean, basically, I think the markets have understood that we have three issues. One is high and persistent inflation is with us. Two is the Fed is way behind. And three, the pathway for orderly disinflation is pretty narrow. Because of that, you're starting now to have questions about growth. You have Goldman Sachs out today saying there's a 35% probability of a recession in the next 2 years. That's a meaningful number, 35%. So the big question is, can we navigate this inflation growth landscape that has become much more difficult? And you saw that in the comments that Leslie repeated from bank CEOs. They're worried about the macro environment.
You want to speak about crypto this morning? We've been trying to make sense of it. A lot of folks this morning looking at some of these prices, and especially when you start to look at the technicals, there's a view that once you cross some of these boundaries, the lower boundary becomes quite painful. And is it the tail wagging the dog, the dog wagging the tail? What's really happening here longer term?
I think the concern for the crypto people is that this decline is happening at a time when gold is up and hitting almost 2,000. Because the big argument for crypto is it's a diversifier. At a time of inflation, it is attractive. And recently, crypto hasn't played that role. Now, there's a reason why, and that's because crypto, unlike gold, benefited enormously from all the liquidity injections. So what you're getting in crypto is this tug of war between a recognition that liquidity is going out from the system as a whole and attractiveness as a diversifier. And so far, it is the liquidity element that's winning out. So, and that's going to... Sorry, go ahead, Andrew.
Well, no, what I was going to say, though, is then longer term, do you look, is this an indictment of crypto, or is this one of the great sales of all time?
So I think what you're seeing across the board is a restoration of value. And that is a good thing. So you're seeing it in stocks, you're seeing it in bonds, you're seeing it in crypto, and we are just adjusting to a paradigm in which liquidity is no longer abundant and is no longer predictable. So I view this as part of the restoration of value that we are seeing in quite a few assets. Not all of them as yet, but quite a few already.
There's some people who want to know, Mohamed, though, how much longer this restoration is going to go, and because it means that things are going to go lower, it sounds like, no?
Yes, and I've been saying this with you for the last 3 to 4 weeks. I was very impressed with the resilience of stocks. And over the last 3 to 4 weeks, I said to you, now be careful, because we're hitting some critical points. We have to take seriously the fact that stagflation has become the baseline, that recession has become the risk scenario, and that we're no longer anywhere near the Goldilocks scenario. So we have to price that in. And we are still in the process of pricing it in. So yes, I would be cautious here across the board.
You think inflation's peaked out? I mean, that's the other big question that I think is on everybody's mind right now. You've seen some things seem to get marginally better, whether it's autos, used or new, maybe on the lumber side and things like that. But then, last week, and I was out in Seattle, Amazon adding a 5% surcharge now, for example, to third-party sellers.
So mechanically, inflation will have peaked out for now. Why? Because base effects are going to be favorable. However, there is another inflationary impulse in the system. It comes from the very high PPI we're having. It's coming from a very tight labor market. So we cannot declare inflation over. Expect especially core inflation to persist at high levels. We're nowhere near the end of our inflation challenge.
So you think we're still, what are you thinking about? If we're at 8.5%, you think we stay around there? We come down to 7? I mean, all of that's still higher than where you want to be at 2%. I don't know what you think over the next 3 years. Are we living at 4 or 5%? What does it look like to you?
Okay, so short term, we're going to come off the 8.5%, but we're not going to come off much. And we may have another leg up later in the year, especially if the Fed doesn't get its act together and if the Fed doesn't control inflationary expectations. Longer term, we're not going to get back to the Fed's 2% this year or next year. So the Fed's going to have a really difficult choice. And it's only a matter of time until you hear people talking about the Fed having to change its target. So yeah, we do have an inflation issue. We're not going to get anywhere near.
Now you're raising a tough one. Okay, so what would force them to change their target, and what would that target be?
So what will force them to change that target is the recognition that by being so late, they can't get to that target and that credibility is threatened. They will also worry that by hitting the brakes too hard, they may push this economy not just into a short-term recession, but into a longer-term recession. And they will be very tempted, and lots of people will push them to raise that target from 2 to 3 as a way out. Now, that's not going to be an easy way out, and it's going to be incredibly controversial. But that's what you get when you waited too long to recognize what inflation is and to take action. We should have started QT last year. We didn't, and we're now bearing the consequences of the Fed being so late.
Okay, Mohamed, if you're right and they do that, what happens to gold and what happens to crypto on that day?
They both go higher in a world like that.
Mohamed El Erian, it is always great to see you and get your perspective on all of it. Thank you.
Thank you.
Appreciate it. Coming up, we're going to